Hi everyone, I'm Punya Aggarwal, ACCA affiliate, co-founder of Being ACCA. In this video, we are going to do case study number 2 of AA pre-June 25 mock, section A. I've already done question number 1, and you can check out the playlist on the YouTube channel. Let's start with the question. Let's first start by reading the question so that we understand the case study and then we are able to answer the questions well. Just a disclaimer, I hope you're already done with this question because watching this video before you are attempting the paper does not make any sense. It's better that you attempt the paper, then find out your mistakes, see where you went wrong, and then watch the video. So let's start. It is 1st July 2005. So today is 1st of July. I'm sorry. Yeah. Okay. Your firm is the external auditor for McBeth's company for the year ended 31st of April 2005. So our year end pertains to 30th April 2005, and the audit for the year is nearly complete. All right. So guys, these dates are very important whenever we are solving any question, because whenever we get the dates, it's always good that we also highlight these, because once you read the question, you'll get to know the importance of these. All right. McBeth provides scientific services to wide range of clients, which includes testing food for illegal additives and provide forensic analysis on items used to commit crimes to assist law enforcement. All right. McBeth's income has fallen due to adverse effect of two high-profile court cases, wherein McBeth's forensic analysis services were found to be in error. All right, so there was some error in their analysis, forensic analysis, due to which they're having two high profile court cases. Not only did this provide bad publicity for them, a number of significant clients withdrew their contracts for obvious reasons. Some senior employees then left the company, stating that the lack of investment in new analysis machines were increasing the risk of incorrect information being provided. So now there is a lot of things which are going wrong. There are two high profile cases which the company has to cater to. Then the employees are also of course you won't be getting clients, your reputation is at stake, your employees are also probably leaving the company, so you won't be having employees to work for you. So a lot of things are going upon. Management's assessment of McBeth's ability to continue as a going concern covers the period to 31st of July. Guys, this is very important. I know sometimes we ignore the dates, but we cannot ignore. So basically, if I go upon this, our year end is starting from sorry, 1st of May 2024, for example, to 30th of April 2025. Right, this is the year end. Now they are considering covers up to 31st of January. So for the next year, you people know that whenever we are talking about going concern, we always talk about the future. That is our company a going concern in the future. Right now, it's not a problem, but in the future, will it be a going concern? So probably they're considering the next financial year, which will start from 1st May 2025 and will go up to this particular year. Right, and between this there is a date which is 31st of July. Till that they are saying that we probably can continue as a going concern. So it's not even 12 months period, right? It should end at this period, and they're ending their assessment at 31st of July 2026. So probably there is a red flag over here. A cash flow forecast prepared by the management for this period, for this particular period till January 2006, not till April 2026. All right. Shows McBeth requiring significant additional cash to maintain the current level of services. So probably you have going concern problems. Consequently, McBeth has decided to apply for a loan and to ensure sufficient cash for operations the next year. Of course, your firm has been asked to provide an assurance report on the cash flow forecast, which will be used in the loan application. Now, can be a problem. This is again, I would say, probably a red flag. I would say, why? Because again, you are here providing an assistance for the loan application. So let's see what the question is asking us. So I hope that the question is understood by all of you, because question understanding is really very important. Without you understanding the question, you won't be able to actually understand and write the answers as well. All right. So let's start with the first question. The first question says, which of the following actions would your firm take in relation to McBeth's going concern assessment? So they're doing a going concern assessment, and your firm, like we as an auditor, what are we going to do? Let's read. Request the management, request that management extends assessment period to 31st March 2026. Guys, again, now here I always say that the best approach to solve any a section A question is go by elimination method. Do not find what is correct, find what is wrong. This is wrong, this is wrong, this is wrong, then you'll arrive at the correct answer. Think of why this can be a wrong answer. All right, the first one, if I read, it says up to 31st of March 2026, but our year end is at 30th April 2026. So again, does not make any sense. If they're doing it for 9 months over here, if they're doing for 11 months, 9 and 11 does not make any sense. You have to have it for 12 months. If all of you remember the concept of going concern, it says that if we were to determine a company's going concern, we have to see the ability for at least 12 months. All right, it can be for more, but at least for a period of 1 year we have to see it. But here also, if they only see up till 31st of March, which is not our year end, it will only cater to 11 months and not 12 months. So the first answer, as per me, should not be the correct answer. Next, request the management extends the assessment period to 30th of April 2026. Now, my year end is 30th April 2026, and they are also saying that their assessment is also, they should extend up to 2020, 30th April. That will cater to 12 months, and probably this is my correct answer. But I am not sure right now because I have 2 more to go. Let's see if they are correct answer or no. Perform additional audit procedures on the cash flow forecast to confirm McBeth's going concern statement. Now, when you're performing audit procedures, until and unless you have the assessment period, you have the evidences, you cannot perform your audit procedures. This is like a later stage. So when we are doing the assessment, when we are seeing the assessment period, after that, we are going to do the audit procedures, not before that, right? So this is probably not the correct answer that we should take as a first step, probably. Request management's assessments to be extended only if it is if raises doubts that McBeth is a going concern. Absolutely wrong. This is absolute wrong statement. Why? Because again, extended only if it raises. So of course they're having the going concern problems, and they're saying it should only be extended. So if you again remember the concept, it says irrespective of whether the company is a going concern, if it is facing going concern issues or not, you have to see the assessment period for 12 months. All right, so extension is irrespective of whether the company is facing a going concern problem or no, right? So this one, fourth one, is absolutely wrong. The second answer is absolutely correct, wherein we are extending the period up to 12 months for till 30th April 2026, so that we get the 12-month period timeline to see if the company is a going concern or no. I hope it is clear. So that is the reason when when I was reading the question as well, I told you that this is very, very important. Reading the dates, understanding the dates is very, very important for you to answer the question. All right, Nidho, I would assume most of you would not be able to answer this question, probably because you would not have read the timelines very, very carefully. All right. Okay. Let's move to the next question. All right. Your firm of auditors. Now, here, it is a difficult question, not a very difficult question, I would say, but you need to understand this question. All right. Your firm, just a minute. Yeah. Your firm, McBeth's auditors, have been asked to provide assurance on the cash flow forecast. So this is what they were talking about over here as well, that you have to provide the assistance over the cash flow forecast. Which two, guys, this two is very, very, very important. There are a lot of students who skip on these because they do not read the question really well. They're so much in hurry that they lose out marks because of this, and they have written in the capitals also. You have to focus upon these. Out of these four, you have to write two as correct. All right. Okay. Below regarding assurance provided by auditors on forecast are correct. So two statements over here are absolutely correct. We'll again go by elimination method, and then we'll understand why these two are correct or these two are not correct. All right. So the auditors would give reasonable, just a minute. Yeah. The auditors would give reasonable assurance reasonable assurance and a negative conclusion on whether the cash flow forecast and the assumptions are reasonable or no. Guys, we know whenever we are giving the assurance on the cash flow forecast, we never give a reasonable assurance. Reasonable assurance is only given when we are doing full-fledged audit, right? But this is other services that we are going to provide to the company, so we cannot give them a reasonable assurance. This has to be a limited assurance, because here we are going to do review engagements. If you are little confused about this topic, kindly go through the revision of this particular topic from your pocket notes or from your notes if you have any. You will understand that there is a difference between limited assurance and reasonable assurance. So reasonable assurance is only given to the people who is only given in the situations wherein you do audit, full-fledged audit. Whenever we having review engagements, we'll always be having limited assurance. All right, so that is the reason first one is not the correct answer, because they're saying we'll have a reasonable assurance. Okay, this will be agreed upon procedure as it is based on estimates made by management, therefore no assurance will be provided. Absolutely no. You can definitely provide the assurance on the cash flow forecast. That is the duty of the auditor to do that. That is one of the services that the auditor can give. So no assurance is again not the option. Now, via elimination, I got to know that 1 and 2 are not the correct answer. Now, 3 and 4, one of these is the correct answer. As a student, I'll be good. I'll just say, अच्छा दोनों गलत है, बाकी दोनों ठीक होंगे. Let's move ahead. But right now, when I'm explaining you, I'll also explain to you why these 2, 3, and 4 are correct. All right. Limited assurance. So as we discussed just now, that review engagements, which is assurance engagements on the cash flow forecast, is an example of review engagements. And review engagements are always done under limited assurance, wherein we are giving assurance, but that's limited. All right, will be provided by the auditors in cash flow forecast and a negative conclusion. So you always know, again, there's another difference between limited assurance and reasonable assurances. In the reasonable assurance, you always give positive conclusion, whereas in the limited assurance, you always give a negative conclusion. So only if you know this concept really well, then only you'll be able to answer this question. I think I am not really sure in what video did I refer, but I always say that in section A, out of 3 questions, one will be as per your substantive procedure review reporting topic, one will be from your corporate governance, assurance, or your ethics question. This one is from your assurance portion. So you have to understand this really well. These topics are very, very important. You cannot afford to skip on these topics, although they're very, very small topics, but you cannot afford to skip on these, right? So so basically there are 2 differences. One is in regards to that limited assurance is done for the review engagements, or reasonable assurance we claim when we are doing the audit procedures. And the second one is whenever we are doing review, your reasonable assurance, we always have a positive conclusion. Whereas whenever we are doing limited assurance, we are having negative conclusion. All right. You can also make some notes with you so that you remember these knick-knack things. All right. So the third one is correct, of course, because we're doing limited assurance and we are also having the negative conclusion. So absolutely makes sense. Next one, the auditors would need to gather sufficient appropriate evidence to form the basis of the conclusion. This is irrespective. If the auditor is doing anything, any assurance, any audit, any review, he or she has to get sufficient appropriate evidence to conclude that particular thing. They cannot just oversee and they say, yes, it's already all fine. You have to have your conclusion. You have to have your basis that why are you doing that, right? So that is again part of which means the last one is absolutely correct. Makes sense also. All right. So with this, we're done with second question as well. Let's move to the third question. All right. Okay. Another very, very, I would say, important question from your exam perspective, I would say. And you need to understand really well. They have merged 2 topics over here. One is going concern and one is your assurance. All right. Okay. Let's read the question. Okay. Which of the following audit procedures would the auditor perform in assessing whether or not McBeth's company is a going concern? So now we are seeing audit procedures for the going concern. So the key words over here is audit procedures and the going concern. All right. So these are the options given to you. Let's read. obtains McBeth's. Now, when I was reading the question as well, I told you that whenever we are obtaining the evidences in regards to going concern, we always look at a futuristic approach. We are not concerned right now. Of course, the company is right now going, but going concern basically means that in the future, do you think the company will be able to survive? The company will be able to run, and that period is seen between 12 months. Like, does the company has a runway for 12 months or no? Right, this is a futuristic approach that future में ऐसा होगा या नहीं होगा, right? Now, when we are reading the question, keep that in mind, because then only you'll be able to answer your going concern. Even when you are provided for audit procedures in your section B, when they ask you the substantive procedures for going concern, I've seen students referring to comparing the past reports, etc. You are not supposed to do that, because going concern basically means futuristic, having to say ki in the future will they be able to survive, so procedures will be in a futuristic manner only, right? Obtains McBeth's statement of cash flows. Okay, review the cash inflows, outflows, and assess the assumptions for reasonableness. Now, this is one of the old procedures that you people would also write in a section B. But mind you, this is absolutely wrong. Why is this wrong? Is because it says statement of cash flows. Now, you people know statement of cash flows is based on your previous data, your historical data. That, for example, in the previous year, these were the inflows, these were the outflows, these were the operating expenses, these were the investing expenses, etc. Right? So these are all the information jo ho chuki already, which has happened in the past already. Right? This is not part of your future. Instead, if you want to write this correctly, you can state statement of cash forecast, statement of cash flow. So what you are forecasting in the future, that these will be my inflows, these will be my outflows in the future, and these will be the remainder amount which I will be left in cash in hand, right? So that is the reason your first is absolutely rubbish, does not make any sense, because here we are looking at the historical data and not futuristic data. All right. Second, evaluate management's plans for future actions. Future actions. Okay, I think this can be one of them. Let's read. Including their contingency plans in the case the loan application is not approved, and consider the feasibility of these plans. Now, yahan pe we got to know that the company is aiming to obtain a loan, but they are saying that you always need to have a backup plan. So that is what they're saying, that we as an auditor, we need to see if the management has a backup plan if they are not able to get the loan. That is a futuristic approach, right? So if in the future you're not able to get the loan, what are you going to do? That is one aspect. Probably the company is not able to do anything and causes a concern over the going concern in the future. So that is correct. All right. So second statement makes absolute sense. So here, let me eliminate. One is not the correct answer. So this cannot be right. This cannot be right. Now, these two I have to choose. Let's see. Review the company's post-year end sales. Okay, post-year end, after the year end sales, I'm seeing, and order book to assess if the levels of trades are likely to increase and if the revenue figures in the cash flow forecast are reasonable. So two keywords over here. One is year end sales. I'm seeing after the year end what all other sales that I am going to recognize for this particular year. And then I'm also seeing the cash flow forecast to see if these are reasonable. My inflows are reasonable. Again, makes absolute sense. So correct. Now again, I'm concerned about these two because fourth is also left. Let's read that as well. Review management's accounts for the quarter ended 30th April 2025. This is my current year. My future, my next financial year, जिसके लिए I should actually be seeing the cash flows, is 1st May 2025, sorry, 2025 to 30th of April 2026. So, I am doubtful. Let's read. To assess if it is aligned with cash flow. Now, a lot of students, if you're somebody who is not understanding, but you're rote learning, you're thinking, अच्छा, cash flow होगा, statement of cash flow होगा, तो नहीं आंसर है, लेकिन forecast जहाँ पे आ गया, वही आंसर है. तो आप ये बिना आंख बंद करके, you will answer this one. But guys, if you read, they are saying that we are looking for the previous year. We are not looking for the next year. Technically, हमको इस साल का देखना चाहिए, but they're still looking it for 30th April 2025. अगर यहाँ पे they would have written 30th April 2026, then yes, absolutely you're correct. It would make sense. That is the reason I say that do not learn anything in audit. Your concepts should be clear. Your agenda should be clear in terms of the understanding of the concepts. Without that, you won't be able to answer the questions, especially section A, which comes very, very tricky in the final exam. All right. So fourth is not the correct answer because again we are saying the historical thing, the past thing जो already हो चुका है. We're not concerned about the future, right? अगर यहाँ पे they would have written 30th April 2026, absolutely correct. Okay, makes sense. Let's move to the next one. So basically my answer here is 2 and 3. All right. Next question. All right. Which of the following statement is incorrect regarding the auditor's responsibilities in relation to going concern? Now, this is very, very important. Now, students feel that, which of the correct, कौन सा correct है वो answer करना है. No, they're saying incorrect, meaning तीनों चीजें out of these four, three would be auditor's responsibility and one would not be an auditor responsibility, probably a management responsibility. I hope you people know what are the auditor's responsibility, what are the management's responsibility. If no, please revise. Very, very important. This is again from your starting chapters, chapter 2, 3 and 4. I think 2 or 3 mein hoga ye. Again, very, very important. And this is also there in your reporting area, wherein we have an audit report and then they state this is management responsibility, this is auditor responsibility. So you can revise from that as well. Okay. Let's read. Evaluate management's assessment of company's ability to continue as a going concern. Of course, this is our duty. As an auditor, this is my duty to evaluate if the management is saying that yes, we are going concern, but I cannot believe them. I need to assess them. I need to scrutinize. I need to see if they're telling me the truth or no, or they're being too delusional about it, right? Of course, nobody would say that yes, my company will end in 10 months. Of course, everyone said no, it will run, it is in a very good position, etc., for obvious reasons, right? So as an auditor, this is our duty, our responsibility, that we show them a mirror that no, hey, listen, that as per these assessments, I don't think so that you are true, so you are delusional. Okay, so not the correct answer. So this is actually the responsibility of the auditor. That is the reason this is not the correct answer, because they're asking us the opposite thing. All right. Okay. Remain alert throughout the audit for events or conditions that may cast significant doubt on company's ability to continue as a going concern. Of course, you have to be professionally skeptic, right? So that is the reason this is again our audit responsibility of the auditor, therefore not the correct answer. Obtain sufficient appropriate evidence to determine whether a material uncertainty exists which may cast doubt on the company's ability to continue as a going concern. Absolutely, yes. This is your responsibility as an auditor. This is your responsibility. So again, not the correct answer. Decide whether or not the company will prepare. See, now we have eliminated, so we already know that the fourth is the correct answer. But why is it correct answer? That is also very important to know. Decide whether or not the company will prepare its financial statements using the going concern basis of accounting. This is your, now you cannot decide, you as an auditor cannot decide the basis of accounting. This is management's portion. You can review it, but you cannot decide on their behalf. All right, so that is the reason this is actually the correct answer. This is management responsibility and not auditor's responsibility. All right, let's move to the last question. So your D part is absolutely correct. All right. Okay. The auditor have concluded, just a minute. Yeah, the auditors have concluded that there is a material uncertainty relating to going concern. Now, they have concluded that yes, it is a problematic situation for the company. The management has included a disclosure regarding this material uncertainty in the financial statements. Okay, so they have also included a disclosure for the same. For this, you need to be very, very good in reporting portion, reporting area of your syllabus. All right. Which of the following statements on the audit opinion and the report, so opinion also and the report also you need to see, is correct? All right, let's move. if the material uncertainty is adequately disclosed in the financial statements, okay, so ढंग से उन्होंने disclose करा है, the auditors will give unmodified opinion. Yes, that's fine. And will include EOMP paragraph in the audit report referring to the disclosure note in no. Absolutely wrong. This statement, okay, just a minute. This statement, if I wait, yeah, this statement, if we see this statement till here was absolutely making sense that if they're adequately disclosing, so we don't have a problem. So probably we are going to have unmodified opinion, but will include an EUMP paragraph. No. When we are talking about material uncertainty, we have to talk about the MURGC paragraph. Material uncertainty relating to going concern paragraph. So this is wrong. Does not make any sense. All right. If the material uncertainty is not adequately disclosed, all right, so now they're saying that probably they've not disclosed this very well. Disclose in the financial statements, the auditors will give a qualified opinion and will include a material uncertainty relating to going concern paragraph in the audit report. No. So here you will be having a qualified opinion. You will be having qualified except for opinion regarding the same, right? You won't be having a qualified opinion. Of course, you'll be having, but you won't be probably having a material uncertainty going concern because the disclosures are now not adequate. Your disclosures have to be adequately disclosed. If that is the true case, then you can have a MURGC paragraph. All right. If the material uncertainty is not adequately disclosed in the financial statements, the auditor will give adverse opinion. Okay, can be an adverse opinion also. So it can be depending on the materiality. It is highly material, but qualified opinion and except for opinion depends on the company, but here I think that they will be having adverse opinion. So here the explanation can be that qualified opinion should not be given, it should be an adverse opinion because material uncertainty will impact a lot of different areas. I hope you know what is pervasiveness, material and pervasiveness. Let me quickly guide you through that as well. There are two things. One is materiality, material. Another is pervasiveness. Material is you calculate the percentage of it and then you see if it is material for the financial statements or no. General. Pervasiveness means that it is affecting a lot of areas of your financial statements. It's a big issue. All right. So for example, if I say that my provisions was a problem in the financial statements, now provision is only impacting one item of the balance sheet. It's not impacting my revenues. It's not impacting my cost, profits, etc. Right? But if I say that my revenues are misstated, my profits are misstated, my cash flow is misstated, etc. So that's impacting a lot of different areas. So that is the meaning of pervasiveness, which is very big issue. And when we have a material and pervasive issue, we have an adverse opinion. So in this case, because it is talking about material uncertainty, it is going to be an adverse opinion with your MURGC paragraph if you are not adequately disclosing, right? So if I read, not to confuse you people, let's read it again. Okay, so this is wrong. Of course, we know this is wrong. Why this is wrong? Because they should be having adverse opinion in this case, right? This is, let's read this. If the material uncertainty is not adequately disclosed, again, they're not adequately disclosing it, the auditors will give an adverse opinion. So yahan tak we are okay. This is fine. Will include EUMP paragraph in the audit report referring to the disclosure note in the financial statements. Again, not this. They will be having MURGC paragraph because this is we are talking about going concern issue, right? So yahan tak half a line was fine. This is not, so not the correct answer. Let's read the last one. Probably, of course, this is the last correct. But why is this correct? Let me tell you that as well. If the material uncertainty is adequately disclosed, so adequately disclosed, as an auditor, I don't have any problem. All right. In the financial statements, the auditors will give unmodified opinion. Of course, yahan tak this is same. So हमने ये बात की थी yahan tak it is absolutely fine. Yahan tak it is absolutely fine. Will include material, which I told you yahan pe bhi, that instead of this we will be having MURGC paragraph, and that is what they are saying, material uncertainty relating to going concern paragraph in the audit report referring to the disclosure in the notes to financial statements. This is absolutely makes sense. So we are adequately disclosing it also, then we are having the unmodified opinion also, क्योंकि उन्होंने disclose सही से किया है, and just for the stakeholders we're also having the MURGC paragraph. All right, makes sense. So with this, we are done with the debrief for the question number 2 as well. Let's meet in question number 3. If you people have any doubts, please comment down below. I'll be more than happy to help you.